Hello and welcome back to the class. In this video, I'm going to take a look at a correlation chart. And the first thing I got to say is there are several of these available out there on the internet. It's not just this one. They're all you have to do is Google Forex correlation chart. But one of our favorite ones is MyFX book. This correlation chart that they have, you can see has pairs on this side and then markets over here. Or they also have like the Chinese 50, the French 40, and Hong Kong 50, DAX, for example, and so on. So there is a lot of information to glean from this chart. One of the biggest mistakes that new traders make is they don't understand that there are high correlated markets out there. And this makes sense because the global markets are so interconnected. One of the most probably common and well-known examples would be the Australian dollar, as gold tends to have a major influence on the Aussie. And that makes sense because Australia is one of the largest exporters of gold in the world. And when gold rises in value, typically the Aussie will as well, as people are buying gold from those Australian miners who need to be paid in their local currency, causing a bit of demand for the Aussie. So, using that type of knowledge, you can start to think about the markets in a interconnected way. You know, you may not be a equities trader, but there are certain pairs that you can trade that go right along with particular indices, or crude oil with the Canadian dollar, for example. So when you look at this chart, you can see that we take like the Aussie yen, go across, and we can see 94% to the euro yen, and that means that 94% of the time they move in the same direction. So, for example, if the Aussie yen is rallying and the euro yen is lagging a little bit, it may need to play catch up, and you can buy the euro yen if you feel that you've missed this move, or at least gives you a heads up that both of these could rally. When you look at some other pairs, such as the Swiss yen here, you can see that, for example, it's highly negatively correlated with the Euro Aussie. It's negative 81.4%. So that typically means that if this pair is rallying 81.4% of the time, the Euro Aussie is going the other direction. And you can use it the same way. If you don't see any long yen trades, like we had suggested in the Aussie yen, Euro yen situation, if Swiss yen's rallying as well, then maybe you look to short the Euro Aussie. You can see that 81.4% of the time you'd be right. Statistically speaking, of course. So once you understand that there is a correlation between two markets, you can watch one move and then place a trade that you're looking at in the correlating market if it needs to catch up. This makes an excellent tertiary indicator. There are other ones out there that make a little bit more sense too. Euro dollar will typically move about 53% in correlation with euro being traded, or silver being traded in euro terms. As money flows from the US dollar, typically the euro and the precious metals markets will rally a bit. So take a look at these, and they do update occasionally. This is the time frame of 1 day. You can change it, say, to 1 month, and it'll load it up. When you get 100%, obviously that's the same market, and it just kind of gives you an idea as to potential opportunities out there.